Welcome back. If you'll notice, I am here with a little icon in the bottom left corner, I guess depending on, well, nothing. It'll probably be the bottom left corner. But I'm here with Matt. I got a new camera set up. I've got my little thing behind me, but I've basically changed the way that I'm doing videos from now on so that I'll be able to look at screens, do technical analysis while you can see me, which is great. A little more personal touch there, but it also means I'll hopefully be here a little bit more frequently. Maybe Matt will join me. To do videos on not just crypto, which we're going to do today, but also more stock market picks. A lot of stuff going on in the marijuana sector, obviously the tech names, biotech, lots of stuff to play. And from what I've last heard, day traders are at a record high right now because everyone's kind of bored at home and they want something to do and they want to make a little money. So we're going to dive into some stuff here. Just to check in with Matt, so it's been a month, I guess, or even like a month and a half since we last checked in on Bitcoin, and I believe we were at kind of the halfway point of this big dump. We were around 7,200 or so, or 7,500. Matt, what do you feel, how do you feel about the crypto market, I guess, since then?
Certainly a very impressive bounce from the lows. We were down at 37.80 at the low of that flash crash overnight. And it's been a 200% bounce or so, give or take. Very impressive. Weekly time frame, which you're focused on now, is obviously the big picture. And what everybody's asking themselves now is, are we going to be able to see this bounce continue more than the 200% it's already gone to break 1050 and see continuation? Or do we pull back from here, rejecting and giving us that rubber band pattern we talked about back in our very first video? This is the question on my mind, and probably the mind of every crypto trader in the space.
Yeah, so obviously, you know, it's going back. We had that giant shakeout here around 37. We had that one day where we just dumped, I think, like 50 or 60%. Probably one of the biggest dumps on one single day in Bitcoin history. Massive volume day, I believe. One of the biggest volume days in crypto history, followed by a nice bounce with almost the same volume the next day. But yeah, we've had now, you know, we had 1, 2, 3, 4, 5, 6, 7 straight weeks of bullish activity. And then even these ones which kind of topped out, we've seen that it wasn't a spinning top where we just, you know, ended up going back down. We've seen some continuation. And obviously the halving, you know, that's a really big component now, where instead of producing 1,800 Bitcoins per day, we're only producing 900 Bitcoins per day. So the supply of new Bitcoins out on the market has drastically reduced. And that's one of the things that obviously keeps Bitcoin interesting, is because it is not like a stock where it kind of has like this fixed supply of shares and maybe once in a while they, you know, issue some credit or things like that and dilute a little bit. We have a certain amount of Bitcoin that comes into the market consistently since the beginning, and every 4 years that gets cut in half, and that definitely does put stress on the price, right? Because there's only, if the demand stays constant and the flow of supply is reduced, obviously that usually leads to an upward price movement, which, you know, you can definitely see has happened from the beginning of time with Bitcoin. But yeah, the question is, how much are we going to consolidate before we try and take out 10,500, if we're going to take out 10,500? And it looks a little bit like the last 3 weeks have shown that we've been losing a little bit of steam on Bitcoin. So the most important factor is obviously that, you know, we are still bullish. We crossed the EMA 1226 bullish on the weekly, which is great. We didn't reject off of it too much initially, but you can see we had 2 weeks where it was pretty little resistance. You could, you know, short that and maybe buy back here. We did get through it. The big question is like, now what levels are we dealing with? And this is actually a really good time, I think, to start getting back into the videos, because we do have a interesting range to play off of. So with Bitcoin, we have roughly 10,000 resistance. It's 99.50 to be exact, and then 10,067. And then we have that dump low support of 81.17. And then today we kind of have this bit of a double bottom with a couple days ago of 88.15. But I don't expect that to hold too much, just judging on the momentum on the shorter term time frames. You know, we had a little bounce off of it, but we're not oversold too drastically on any time frames. I don't see why we wouldn't break that support. But the most important one for me is then obviously 81.17. But yeah, we're in that tightening range. We might break those supports, but I would say we're probably going to tighten up a little bit more here on the daily. What do you think, Matt?
Yeah, same thing. I mean, when I look at this weekly chart, it does look a little bit toppy to me with these upper wicks and the sideways action for the past couple weeks. But all the clues here, there's no need to guess. All the clues are in the daily time frame, and we have this tightening. So we talked about the potential of the rubber band equilibrium on the weekly time frame between the big range of 10,500 and 3780. But we
Yeah.
also have this on the daily time frame shaping up as well. And weekly, we don't have to worry and look for a higher low unless this daily time frame that you're showing here breaks below the 8100 supports here.
Yeah.
It doesn't look super clear on the 1 day time frame. You could probably look at the 2 day or the 3 day. It might look a little bit better. I probably like the 2 day best. It takes away a little bit of the noise, but I'm looking at this like it's likely to come down and test a support above 8100. I would
Hmm.
start to personally look below 84, or yeah, probably below, at or below 8400. I would start to look for signs of a bounce impending. But again, the most likely scenario on there would be a lower high below the 99.50. So
Yeah.
this has the potential of tightening up for another week or two.
Yeah.
Um, there's not going to be volatility in the space until this pattern breaks, at least with the large caps.
Hmm.
Until this pattern breaks. If you're bullish, bigger picture on Bitcoin, this is an opportunity to start buying, start looking to buy against that 8100. If you're wrong, cut your loss. There's a lot of room potentially to the downside, but you have an opportunity in a few months to get in cheaper for that weekly higher low.
Yeah.
Um,
Absolutely. Yeah.
yeah, and likewise, if you're bearish Bitcoin, if you think that this is garbage technology, it's not going anywhere, you absolutely have opportunities to sell against that 10,000, that 99,950, or 10,500 level, because there's three of them all in a row here,
Hmm.
to sell and short against that, looking to cover on a weekly higher low. So bulls and bears are all watching this pattern play out with this range of 8,100 to 99,950.
Yeah. Yeah. I definitely think there's a lot of opportunity here. One thing I wanted to note too that I noticed is um, when you're in these big breakouts, sometimes the RSI doesn't matter as much. And we've seen a lot of charts where things go up to like 80, 90 RSI on the daily, and then we'd have these crazy dumps where they hit the lows, right? But pretty consistently on Bitcoin, when the daily RSI gets overbought and you're in some sort of range here, right? So the first one, let's say, is 10,500 back in February. We had a lot of resistances around this area. We had 10,905, then just a lot of congestion around this range. But pretty much like we had 2 days of overbought conditions before that dump started. So it's a good idea to take things off. And then you can see we went straight from the lows, basically straight to the highs. We have 1 day of overbought conditions on Bitcoin, and then the dump starts. So it's interesting to keep an eye on those daily RSIs. And I know sometimes it can be very tempting to buy into momentum and say, oh, look, we just broke 10,000. We're going to go at least another couple hundred because that's a big psychological number. But just keep in mind that when we're in these tight ranges, Bitcoin bears and they like to short those daily RSIs that are kind of over 70, but Bitcoin bulls also like to take a little bit off. And you can see as soon as we hit that, we got a nice almost 20% pullback here, right? And now we're tightening up. So, and then the other thing on the flip side is, when you have a big run like this, the first dip is usually a really good spot to buy. And you can see that while we broke through the daily EMA 12, like I've said before, in uptrends it's support and downtrends it's resistance. We broke through it, but the candle closed above it, and then we had a nice 8% day the next day. We had another 5 or 6% move the following couple days. But when you have these breakouts, the first dip is usually a really good one to buy, and it's really good to kind of just use these EMA supports as places where you can logically guess the dip will be bought. Just likewise, really quick, you can see again on the big dump that we had here, and the daily, and this is the 2-day chart, by the way. So actually, we did kind of pierce right through the EMAs. So apologies, maybe use the 2-day chart. But actually, the 2-day chart gives you some good setups for what I'm talking about here as well. But you can see on the bounce here from 3782, we had rejections off the 12 EMA when we kind of first approached it, almost to the penny here for the 2-day time frame. So the 2-day 1226 EMA has also proven to be support or resistance, depending on where you're at. Yeah, jumping into Ethereum. Ethereum's a little bit different, but we've kind of seen the similar thing where, we had this big dump here on that March 11th, Black Thursday, I think it's called now. Um, I'll switch to the daily here. I'm on the 2-day time frame. The one thing that was a little bit different about Ethereum is that we did break over some really key resistances from back in 2019 on this run up in February. It was really ripping hard in February from like 116 to 288. And we had a nice daily equilibrium. That's when we started doing these technical analysis videos, was on this Ethereum daily EQ. And you can see bear break, huge follow through. But Ethereum has also had a pretty decent bounce as well, going up to, from 86 to 227. So almost a 300% bounce, 250% or so. But yeah, as you can see, it did top out a little quicker than Bitcoin did. April 30th, I think, as opposed to something like May 8th, I think, for Bitcoin. But the nice thing is we do have clear resistance here of, about 217. And we have supports of 191.71 and 176. And just going into the daily, you can see that while Bitcoin is kind of testing that low already, Ethereum has quite a bit of space. It's only at 201 versus its support from 3 days ago, which is about $10 lower. While, again, Bitcoin is pretty much right at that support from 3 days ago. Matt, what do you think of the Ethereum chart?
I kind of like this on the 3-day time frame the best. If you want to check that out, and
Yeah.
it's kind of I get it's kind of cherry picking a time frame,
Mm-hmm.
but I feel like this gets rid of a lot of noise and it shows the key levels with a bit more clarity. The reason I like this is because the daily chart's a little bit choppy with these resistance breaks by $1 or 50 cents or a couple bucks without really follow through. To
Mm-hmm.
me, absolutely 191.71 from a few days ago is a good level, but the key
Mm-hmm.
level for me is down at 176
Yeah.
on the 3-day time frame for this pattern. It is an equilibrium on the 3-day time frame. One day I'd be looking at just all these little lower highs. If we get a dip and then we start seeing these break, and that's at 227.30, at 219.30, the 217 double top there, and that's the little break that
Mm-hmm.
got no follow through. This is what I'd be watching, but I am expecting a test of a support above 176.
Yeah.
What is the low of 3 days ago? 191. Yeah, I think that level is likely to come into play, and in my opinion, it'll probably break just because of where it is.
Mm-hmm.
Um, because for me, it's that 176 that is key.
Yeah.
Um,
Yeah.
below 191 is where I'd be interested in looking for a daily higher low. I think that was an attempt, but I think it will remain as an attempt rather than the daily higher low.
Yeah, one of the things too you can see here is that, of course, obviously Ethereum is always like a little bit more volatile. So you get these giant candles, and if you're ever trading these on like exchanges live, just for going like 5-minute time frames, you can see Ethereum will drop, 5-10% relentlessly, while Bitcoin will only do like a 4% drop because, again, the books aren't as liquid. But it's interesting because it is the second most liquid cryptocurrency out there. But you can again see that, whatever way the wind blows, Ethereum blows further. One of the things I think is really interesting about this chart is, yeah, we have these resistances, obviously. We do have a lower high that's a little bit different from Bitcoin. We actually have quite a few more lower highs when we clear the recent high of, April or May. While Bitcoin, after, 10,100, really only has 10,500 and then quite a bit of space to about 13,000. Ethereum's got 251, 277. We got a couple lower highs here. And I think that if Bitcoin does take off and break through 10,200, let's say on a weekly or daily equilibrium bull break, Ethereum is going to have a little bit of a harder time catching up. And likewise, we've seen that on this consolidation, Ethereum has held up. So if Bitcoin is bearish, it seems lately that Ethereum has been able to hold a bit of strength relative to it. But as soon as Bitcoin starts ripping, it starts really underperforming it. And you can see that a little bit here, and that's one of the charts, I think, chart of the week or the month or the summer that I want to watch is the Ethereum Bitcoin chart, where basically we have a very clear descending triangle where we hit these really nice ratio highs. We had a monthly trend change here to hit these highs of 0.0284 on FBTC. And now, we had that pullback, we had a bounce to make a lower high, and we had a pullback almost right to support. And if you zoom in on the daily, we're having this daily trend change. But again, this is a descending triangle pattern, and this is the ratio. So obviously the higher this is, the higher Ethereum is, or the stronger Ethereum is relative to Bitcoin, and the weaker it is, the weaker it is compared to Bitcoin. And one of the reasons I'm a little cautious on this chart, and obviously Ethereum has a lot of stuff coming up this year, but one of the reasons I'm cautious on this chart is that a descending triangle has a bearish lane, because what it means is that you're forming a bit of an equilibrium here, but you're not really creating new supports that high off of the last ones, but your resistances, your lower highs, are consistently, quite a bit lower than the last ones. So it shows that the resistance line is definitely like a stronger downwards force than the upwards force of the support line. I don't know what just happened there. Okay. What this chart is going to do is it is definitely going to break basically by the end of summer. Usually, there's also a little tip that I've heard. I don't know if Matt, you agree with this, but I find that when charts kind of hit the apex of their equilibrium, when they have a bit of a lean in one direction or another, it signifies a higher likelihood to break out in the direction of the triangle. So I think the longer that this triangle goes on for, the longer that we keep setting lower highs and keep retesting that support, the more likely it is to break under it, as opposed to kind of out and bullish instead. What do you think?
Yeah, I haven't heard that statistic, but just looking at it, I fully understand why that would be the case. Just bulls have a lot of runway here in terms of the time axis to try to change the momentum. You are absolutely right. These higher lows are not impressive at all. You've got one very, very, very clear line for the bear signal, but you've got numerous lines for the bullish signals, numerous lines of resistance to break. I fully understand if just you're going sideways and you're trying to bounce and you're remaining within this downtrend slope that you've drawn, absolutely see why that could be the case. Definitely don't want to see a monthly trend change with a bearish weekly pattern like this following immediately. That looks like the potential of a yearly bear flag setting a yearly lower high. So this will be one thing to watch. It'll be very important. And this will be telling you over the next, 12 to 24 to 36 months, are you going to be wanting to put a little bit more capital into Bitcoin compared to Ethereum, or vice versa, depending on how this pattern breaks?
Yeah, absolutely. And so one of the really interesting things about this setup too is that Ethereum does play a big role in Bitcoin dominance in terms of how much of the crypto market does Bitcoin hold. And that's another chart I want to check out really quick here, because usually when Bitcoin dominance drops, that's when we have a thing called like an alt season, where altcoins start kind of ripping because the people in Bitcoin are saying, okay, this is a little boring, it's not going anywhere, let's try and get some action out of these smaller cap coins, right? Because the capital goes a lot further in them. And just judging on the daily here, we had a daily trend change bearish on the Bitcoin dominance chart. And so I'm not covering on this in this video, but there are quite a few altcoins that have ripped over the last few days. OMG went like 100+%. Chainlink, Tezos, a lot of these small caps on Binance are doing 100% over a couple days, and that is pretty typical when Bitcoin kind of loses its dominance here. So from about 69% of the crypto market to about 66% right now. Again, the heaviest weighing factor on the dominance of this chart is Ethereum. So if we start seeing FBTC rise to the top of that resistance, you're going to see the dominance kind of drop on Bitcoin. But if we zoom out, we still see that this chart is fairly strong, and a couple breaks above these resistances are going to lead to even more kind of Bitcoin dominance continuing. What does this chart kind of look like to you? Because it's not really measuring price; it's measuring the ratio of something over another thing. But you can kind of chart it. Yeah.
It measures interest, and you could argue this is a monthly bull flag. It's kind of a long, drawn-out flag. I don't like the number of candles in it, but there is a very clear level for Bitcoin dominance at 62%.
Yeah.
If dominance falls below that, we're probably looking at an extended alt season.
Yeah.
I would honestly be surprised if that support did break on this chart. Um, it's entirely possible it will, but I would expect this to either continue trending upwards or to give us one of those rubber band equilibriums that we're looking at.
Yeah.
I think that on the weekly time frame, I mean, this is a weekly uptrend. It remains healthy. It did not get a ton of follow through on the higher low, but I mean, this year, money is trending into Bitcoin more than it's trending into altcoins.
Yeah, definitely. And like the event of the year has been the halvening, right? Or the
Mm-hmm.
halving. It's been this idea that, we have this Federal Reserve, and this is interesting too. I'm gonna make a quick aside here because I think a lot of the reason that people are interested in Bitcoin, one of the biggest news stories of this year also was Paul Tudor Jones saying, I'm buying Bitcoin as a hedge for my equity portfolio. Um, when we look at Bitcoin, when we look at gold, when we look at the S&P 500, I have this green arrow here, and this green arrow um, signifies the day that I believe Bitcoin bottomed. But we can see that all of these charts, SPY went down a couple days after, maybe a week after Bitcoin bottomed, hit that 3,700 capitulation level. Gold, similar story. So Bitcoin's maybe been a couple days ahead. But the important factor is about March 20th, I think the day that SPY bottomed was the day that the Federal Reserve said we are going to basically enact unlimited quantitative easing, right? And the big problem that caused this dump that a lot of people are saying now in hindsight is that, well, the markets didn't have liquidity. People were pulling money out, the books were thin, race to the exit, people panic selling and causing dramatic drops, right? And now we have a Federal Reserve, which is basically saying, let's increase the M1, the money supply of the states, by 20% in about 6 weeks. So where does all this extra capital go? Well, it's not going directly into the pockets of the consumers. It's going into things like junk bonds, and it's going into banks and some of these companies, and they don't just sit on the cash because the cash doesn't have any interest right now. The interest rates are too low. They're putting it into equities, right? And it's been interesting because this whole time, everyone's been saying, oh, why is the market going up? Unemployment, 30 million, all these bad stats, home figures down, but the market keeps going up. Like, why is it so disconnected from reality? Part of it is because there's just liquidity galore and people want to get a return on their money. If they have some money, the safest thing right now is to go with the thing that's been tried and true over the last 10 to 15 years, which has been equities. So, tangent aside, the thing that is really interesting about this is that the Fed is putting all of this money into, let's just say, companies' hands, right? Or not directly, but they're basically saying that their loans are protected, right? Their debts are not going to cause them to go insolvent. We saw the exact same movements in gold as the market. And it's really interesting. And it's one of the reasons I haven't paid a ton of attention to Bitcoin recently is because Bitcoin has essentially been doing a lot of the same activity as the S&P 500, as the NASDAQ, and even gold to a certain extent. Gold has made higher highs for the year, right? But we saw the panic, which was not having that liquidity in the markets, and that sharp rebound when the Federal Reserve is, basically backing up a lot of these debts and providing liquidity for the markets. So money is not only flowing into equities, but it's also flowing into these safe haven assets. But basically the word is liquidity. It's kind of driving everything in a certain direction. So it's just interesting to kind of watch how that's unfolded. And one of the things I think obviously a lot of people who want to get in the stock market are thinking, why are things so high? I want to buy, but things are so high and everything seems so terrible. Things move for different reasons, but the one thing that has been a theme this year is that every single somewhat decent asset has been moving in a very similar trajectory where we had capitulation lows in March and, big bounces all through April and May. So tangent over. Matt, what do you think about this? Do you agree, disagree? Sorry, that was a lot. That was a lot.
You got me speechless.
Yeah.
I gotta be honest with you. I'm not the best person to talk about this with.
Oh, I'm not an
Unfortunately.
economist either. I'm just,
Yeah.
yeah.
I mean, I fully agree with the big picture that there was a lack of liquidity that saw acceleration to the downside, and there is an incredible amount of liquidity being pumped into the market every single day by the Fed. One of the key levels in the stock market I have is the S&P 500 2400, because that is essentially where the unlimited QE was announced.
Hmm.
In my opinion, this is sort of the Fed level. That level I don't think will be revisited. If that breaks and unlimited QE is still ongoing, that's a red flag to me. That
Yeah.
tells me that the government isn't able to do anything to support this market and to support this key level.
Hmm.
That would be a huge red flag. Wouldn't quite give SPY a zero price target, but that would tell me to be prepared for, or not even prepared because nothing's a sure thing, but to keep an open mind to considerably lower lows if that level broke
Yeah,
during unlimited QE.
for sure.
If the unlimited QE were to stop and that level broke, that would pretty much confirm your thesis and my thesis that it's this extra liquidity
Hmm.
pouring into the market and pouring into equities that is propping the market up, and that the Wall Street trader, that the Main Street investor is not necessarily finding value at this area in the market at this point in the charts, and maybe be a little bit cautious of our portfolios.
Yeah. Yeah, and I will say, I'm going to dive into doing more general market coverage, but if you've listened to CNBC, ever since about 2,700, 2,800 on the S&P or 280 on SPY, I've heard such a bearish lean. Everyone is on the sidelines with cash. You're hearing it, Warren Buffett, all these big investors, they're on the sidelines with cash, and they've missed a pretty sizable move here in the S&P 500, right? But the chart is showing that whenever we do get those pullbacks, there are, dip buyers. The interesting thing I find, and maybe I have to backtest this a little bit more, is that usually when institutions decide to go in, when there's strong institutional sentiment and they're putting their cash to work, that's usually when bottoms form. But as we've seen, is this whole way down, if you look at, and I don't have the charts on hand, if you look at Robinhood traders, they've gone through the roof. There's such a massive amount of retail day traders, right, that are putting in money, and maybe they've just flipped a couple positions around. I don't know if they're profitable, but they've been definitely buying into this bounce. I don't know if they've been driving it, but retail has been on, let's just say, the right side of this trade so far. They have been buying tech stocks, right? They've been buying, marijuana stocks. They've been buying these companies that have seen really big bounces from March. And they've been buying Bitcoin. There's big Bitcoin inflows as well that were coming in around here, and the weekly volume really supports that thesis as well. So, yeah, it's interesting to see. I guess the table's a little bit turned. It's very different from 2008, very different from a lot of the crashes we've seen. We don't know where things are going from now, but yeah, as long as the Fed keeps putting money in, things are going to keep going up. I think the one factor that I've always thought would change things is obviously if the consumer outlook gets really weak. That could lead to bearish markets. We're going a little bit long here because we're talking about everything, but the one thing that makes me think that people would pull money out of equities is if there is inflation and if interest rates start going back up, because basically what that means is right now cash is the worst because you get no return just from holding it. Bonds are terrible. You have to put your money into risky things to get a return, but as soon as you're able to make a good return without having to put a bunch of money into risky assets or equities, I would imagine a lot of people will just pull it out. Why would I want to hold Amazon, which is maybe grinding up, when I can get 5% off of a bond, right? Or I can start putting it back into a mutual fund or something really safe with a guaranteed return of like 4 or 5%. A lot of money will pull out when those rates start going back up, in my opinion. And we've kind of seen this, in the 1980s, the stock market was really rough when the interest rates were super high because, again, if you had cash on the sidelines, you could make such an easy return, right? Why risk it? So, yeah, that's about it. I don't know, Matt. Anything extra to add in there?
I think you covered it all.
Yeah, cool. Alrighty. Well, that was a ton of fun. We're gonna be back hopefully more frequently. I'm going to cover things in the stock market. I have a list of tickers I'll cover. I'll get some from Matt and some other people, but we'll ask everyone too. What are your most fascinating plays you're watching on the stock market right now? Is it airlines? Is it tech? Anything and everything on top of doing Bitcoin and crypto every week as well. But yeah, we'll get to it. Thanks so much for watching. Please, if you like this video, like and subscribe, as we're going to have a ton of more content coming very soon because of my lovely new setup here. And yeah, we'll catch everyone later in the next video. Stay tuned. Yeah, good luck.